Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, July 21st. It is 6:18 in the morning as I'm starting the video. And as always, please run the video at 1.25x on your video player. That'll increase your efficiency, and I don't think you'll miss a thing. I am not the quickest presenter in the whole wide world, and I think you'll be able to stop and pause and get everything you need to do by running it at 1.25x. You won't miss anything. Take a quick look at markets. Futures, oil's up 1.2%, nat gas up 1.5%, ES 0.4, NQ is flat, small caps up 0.8%. They have put a little fade on it this morning. The equities were up pretty nicely about 2 hours ago when I got up. But they put a little fade on that, so we'll have to see, how that carries into the cash open at 9:30. On the macro front, not much at all. FOMC is in the blackout period. We've got, I think, you can look on the blog site, but I think the only thing that really stands out is we got a 20-year bond auction at 1 p.m. And given the moves in the bond market, might be worth paying attention to. So let's get into this. Got a lot to go over as always. So US dollar broke out of the downtrend. We've got some overhead resistance at 93.44. You'll start hearing a lot of noise if we break out of that. You'll also possibly hear some noise if we fall back down below, especially below 92. Which is support, but in this range, I think it's just something to watch. Yields, again, were center stage yesterday. You'll remember Monday, we had the big yield plunge coming down here into the 1.15, 1.14 area. We got a little bounce yesterday. I took my TLT long off. Why? Well, I was stopped out, but two, we're down towards the bottom of the range. Now, if we were to break this 1.14 to the downside, then that's going to open up a whole nother range down to 1%, and then it's a whole new ball game. So keep yields in the forefront, even if you're not trading them. They have a big effect, or have had a big effect on the cyclical trade and technology. So keep that in focus. And if you don't know what I'm talking about, jump back to the dollar chart that I just showed you. There's a couple of scenarios there that you can follow along that ties the dollar and yield trends into which regime is going to do better. And in a rising rate environment, cyclicals, financials, banks, reopening will do better in general than technology. The exception to that has been FATMAAN trades. Why? Mega cap tech has also taken on some defensive characteristics, and also we're heading into earnings next week for FATMAAN. So we know they're going to blow it out of the water. The only thing we don't know is, does the market sell it or buy it? Last night we had Netflix. Some say they disappointed. There was a $40 plunge after hours, but then they bought that right back up. So we'll see how that plays out today. Now, if they, sell the crap out of it today, that'll be kind of a marker on sentiment, right? If they buy it, it'll also be a positive marker on sentiment. If a mega cap tech name can have a wobbly earnings with forward guidance that didn't set the world on fire, and they buy it up, that's going to be a good harbinger of things to come. So let's watch Netflix today on how it trades, and maybe we can get some clues. TLT, here's the bar. If we drop below 150 on TLT, then that's going to open up filling of this gap, and possibly bring it back down here. If that happens, yields will be rising. If that happens, IWM should be performing quite well because that's a rising rate environment and good for cyclicals. The next three charts are our breadth indicators. We had said going into yesterday that the amount of stocks above their 50 was way down here at 26. Planned for a bounce. We got a bounce. Now we're at 35. But look at the whole context of everything. We were at 75 3 weeks ago, and now we're half of that down here at 35. I still think we got upward travel. Can it reverse today? Obviously, yes, it can. But I think in general, odds favor continued up move. And I named today's program Tricky Call. Do we fade it here or do we buy it here? And I think what I want to present to you today, that I want to be a buyer here. I don't want to fade yesterday's move. That may prove to be wrong, of course, but I want to lay out a case for you as to why I want to stay long versus, you know, a one day bounce back and then they fade it. So let's plow on. NYMO oscillator. This has been gold. I mean, this has been absolute gold for me, you know, through the years. When you get down to minus 90, you've got such a high probability of getting a bounce that it's not even funny. Certainly a place where you'd say, we were minus 66 on Friday. We went to minus 90 on Monday. And then yesterday we got a bounce. I thought, you know, this was a bigger bounce than I thought it would be, but still we're at minus 45 and heading north. So I want to stay long here. If you look back at these different occurrences, yes, you can have an up day, then a down day, and then back up again. We could certainly have a down day today, bring it back into minus 60, but it's still oversold. It's still oversold. This is not an area where you want to load puts. Now, that doesn't mean your longs are going to just go to the moon, but it does mean you don't want to be short because the rubber band is still stretched to the downside. Same thing on the NASDAQ. We went down to minus 80. Odds favor a bounce. We got it. I want to stay long and see if we can drive up to the zero line or even keep going higher. This is the equal weight SPY that we've been keeping an eye on. Why? Because that knocks out all of the Apples and the Amazons and all these mega cap names that weight the index. And you can see here that we tagged the bottom of the range and then we got a bounce. Now, right here going forward, the equal weight SPY is wrestling with the 50, the 8-day, and the 20-day moving averages overhead. A significant technical event would be to recapture that. But it doesn't come without risk. Those are resistance levels to be sure. So if there's a period of backing and filling of yesterday's move, excuse me, or taking some time to chew through these resistances, that's fine, but it is there. So I would think, looking over, if we can recapture the 50 at 149.25, actually we already are over 149.39. So if we can knock out the 8 and 20-day moving averages, that would be a big plus. And then the final, another big level would be to recapture the uptrend line and then to finally break out. So those are the overhead levels that I would be looking at. On the downside, if we break below 146, I'll just say it like this, it's over, right? That would take us below the range and open up a downside move. So always look at both sides of the coin. Here on the SPY daily, we had our drop, we had our tag of the 50, which you can see going all the way back. Here, support, 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 support. Here, we got the bounce. What I've done here is lay on the Fibonacci retracements from this pivot low to this pivot high, drop them in, and you can see that we had a 618 retracement. So we went up, we pulled back 61.8%. That coincided very well with the 50, and we got a bounce. So check mark. This was an uncorrected move. This move from here to here was uncorrected. And so now we've had our correction. So now I tend to think that that correction was a one and done. Time will tell. Here it is on the 2-hour chart. We came down. We tested the 50. We got the break above. And yesterday we pointed out that you wanted to be a buyer of 425. You got that. You got that back test yesterday morning. And if you got long in here, you were golden the rest of the day. I forgot to mention something here. I wanted to make a point of this. Back in the day when I was a school kid, a favorite pastime of students would be to carve stuff in their desktop, right? Take out your pair of scissors. When the teacher was really not getting it done, you carve things in your desk. You carve your initials, you carve stupid sayings, you did whatever you wanted to do. Here are some desktop engravings I have from my trading desk, and they've served me pretty well through the years, and I think you should take a note of it. Number one, don't fight NYMO. It's a losing battle. When you get down to minus 60 on NYMO, respect it, use it to your advantage, because, you know, it's kind of like Father Time. It stands undefeated. Once you get down below minus 60, you're on borrowed time on the short side. So look to be scaling out and then flipping long. Number two, fade fear. Go back to your Twitter feed on Monday. You know, the bull market is over. It's a disaster. You know, this is the big one. Fear sells. When I have a scary headline on my morning note, I get more views. When people put on scary notes on Twitter, they get more views. It's just the way it is. But the thing is, it rarely works. So fade fear. Don't sell it. Well, let me put it a different way. Buy fear. Don't sell it. Buy the dip. Don't sell the dip. And of course, we have levels to help us with that. Number three, make the market take me out. What do I mean by that? Don't try to front run in your mind what's going to happen. What do I mean by that? So yesterday, we caught the low. We were positioned for a bounce. We got the bounce. Do we want to sell out of that position thinking, oh, well, that's it. You know, we can't go any higher. They're going to fade it. They're going to sell it. No. What you want to do is find locations on your chart that would tell you you're wrong. That way, the market takes you out and not your brain that's overthinking it. So today, we're long. We're going to stay long until the market says we're wrong. And I see it all the time. I see it in the trading room. You know, I closed out my position and I'm thinking to myself, why? It's going up. And then 2 hours later, that person will say, wow, I didn't think it could go up that high. Well, if you stayed in, you would find out. Now, if you get stopped out, that's a totally different thing. That's the market taking you out. And so I think that will serve you well. That'll let you stay in trends longer, stay in positive trades longer, and you won't have that regret of, selling in an uptrend or closing out your short because, quote, you didn't think it would go that far. Markets will go higher and markets will go lower than you think they can. And the idea is to stay in a winning trade as long as you can. Lastly, celebrate wins and manage losses. Yesterday, if you look at the morning note and look at those pivots, if you bought any of them, you had a huge win on your hands. If you didn't, I'm sorry. Take a look at your process. Take a look at your thinking, why you weren't in it. But when you got a win like that, and hopefully it was a mega win, celebrate. Call your spouse and say, hey, the hamburger helper that you were planning to make tonight for dinner, hey, let's do that another day. Let's go out tonight. Let's go get a couple of ribeyes. I'll do them on the grill. Celebrate with your family. Let them know you had a big win. And then on the days that don't go so hot, you manage those losses. So, wins like yesterday don't come along every day. If it did, we'd all be rich, and we're not. So we know that there are losses on the horizon, but you manage those losses, and you try to have yesterday be a day that's like a magic eraser. All those stop outs and paper cuts and frustration, you get in at the morning pivot and it just goes straight up. You stay in that trade and you make a lot of money. And so make some noise about that with your family. Let them know you had a good day. And I think that'll serve you well. So let's move on to SPY here. Let's see, where were we at? SPY 2 hour. I dropped in the fibs. Here was your buy point yesterday, 425. Right on up. No hesitation, no shakeout candles, no oh my God, just stay in the trade. So today we are up in this 618 retracement of the down move. So here's the question, and here's why it's tricky. Is this an ABC? A, B, C? Or is it a V bottom? And to my way of thinking, we are in an uptrend, right? We're in an uptrend. This has largely been an uncorrected move. We got the correction of the tag of the 50 and a retracement of this move. So now I think we're on the upswing. We've reached the midpoint of this channel. So here's what I would say for active traders. Stay long against 431. Stay long against, this little zone here. And if they decide to sell it and you had rolled, and this is what an exact reason why that I send out notes during the day. If you caught this move, take it to the bank. What do I mean by that? Roll up your strikes. If you got long, 425 calls, and now you're at 431, you made $6, that's a paper profit until you roll up your strikes. So today, if you're long like 431 calls, something like that, up at even money, if the market starts making a down move and you go back into this prior gap, you could easily come back down in here to 428, 427 before it goes higher. And you don't just want to sit there. So get out and then recalibrate. You may even have a tactical short here below 431 and let it come down to wherever it's going to come down at the bottom here, at the bottom of the range for another back check, and then buy it there for a bounce. Here it is on the 30-minute chart, even shows you more dramatically. In my way of thinking, you've got a large volume over price bar here, right at 430.50. I think that's a good line. That's a good line. If SPY can hold the line there, I think you can feel secure that we go higher. If we drop below that line, not a lot stopping it to coming back to 428. So if you're an active trader, I would be exiting any longs that I carried overnight, and I would be trying a short against like 430.50 with a stop just above, and see if you get a down move into 428, 427. Here's the Qs. Not out of the woods, but we had this up move, and now we had a 38% pullback, and now we got the bounce that's right up here at the 8-day. To me, that's a valid correction. Could it come down farther and get to the 50? Sure, it can, but I'm betting on a long here. Here again is the 2-hour. Here's the down move. Here's the bounce, 618 bounce. I think today 358. If you can stay long against 358, and if we lose 358 to the downside, I would reset. I would get out of your longs and reset. And this is all active trader stuff. If you were long on the daily chart and we got this bounce, I would just stay long, and I would have an area on the daily chart where you say, you know what, I'm going to step aside here. But I think we're going higher, and a confirmation of that would be if we can hold 358. 30-minute chart. This is the same information blown up. We've got a high yesterday afternoon of 360. So let's say you're not in. We come back in here, we kind of hold 358, and then we bounce. A confirmation, if you will, or a bullish development, if you will, would be if we take out yesterday's high around 360. If we take out 360, I think the next technical target is 362. IWM. Here's another thing to carve in your desktop while you're carving those other axioms. Buy support, sell resistance, support, 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 support. You buy support. And if the market decides that the world is ending, you're stopped out. And you got plenty of time to say to yourself, something's different, the world is ending, we're going down to 190. You can get short in here with a stop just above, and if the world ends and you're profitable. But right here, that's a place to buy, not a place to sell. So now here today, let's look at it on the 2-hour chart. Here's what we've done. Downtrend, undercut. This is the bottom of the range. We got a bounce that has come up to the top of the 2-hour down channel. Now you can look at it one of two ways. One, this is a place where if the downtrend is going to continue, it's going to fail here. And if it fails, if it drops down below 218, I think you've got a solid short, even just for a corrective move back to 215 right here. Okay. If you can hold 218, the door's open to 220 and then 222. So pre-market, small caps were the strongest. So they were up, 0.8. So we may have seen the corrective activity in cyclicals that, have gone from 230, 232 down to 212, that's $20. So that's a healthy correction, and we're at the bottom of the range. I think we got a good chance, at least, to get back up in this 50% retracement area, 222 to 225 in that area. And so what would confirm that is a break above 218 that it can hold and then recapture 220. So today, as we grind higher, if we do that, each time these levels are taken out from below, that's a place to buy. And here it is on the daily chart. No big deal. Here you got your pivot at 218, and you've got the overhead levels that you can key off of. Moving on to FATMAAN. So downtrend in Facebook, bounce. Today the key level is 344. Now I'll tell you that I bought 340 yesterday. I still have my position. I'd like to see 344 taken out. If 344 can get taken out, it opens the door to 348. We got earnings next week. So, today's kind of an important day. If we come back and we lose 340, that would not be good. That would make this look like a downtrend with a little Fibonacci bounce into resistance, and then they faded it. So that would be bearish. So key off at 344 and key off at 340. I think if it takes out 344, you can buy it. I think if it comes back in to test 340, that would be a pivot there that you either buy it and get the bounce, or it breaks down and then you're back into a bigger down move. Apple had a nice day. Buy support. Got the bounce. It gets tougher right here, 147.50. We did reclaim the channel, which is good news. We've got earnings next week. If it can take out 147.50, then I think you've got an open door towards 149, 150 ahead of earnings. But if we drop back down below the channel and come back down towards 144, then again, it'll look like a down move with a Fibonacci bounce, rejected at resistance, and then trailing back down. So I think the whole key today for Apple is 147.50. Nice day on Tesla. Earnings next week. Down move, buy support. Break above trend, break above a well-defined level. I think you can stay long against 655, and I think your next target is 670 and then 690. And who knows, ahead of earnings, if FOMO gets involved, you could see a run up there. If the market starts to wobble and you lose 650 back down below this uptrend line, if you're a short-term trader, I think you gotta take your medicine right there if you lose 650 and come back down here, because then that'll open up 625. Microsoft, consolidation range, break down to support. Lot of support. 5 or 6 bars down here at this 275.50. What are you supposed to do? You're supposed to buy support. So you buy and you get the bounce right into resistance at 280. 280 is the key. You break above 280, then you're looking for 282 and 284. You get rejected here, could come back to 277. So I think taking out 280 is paramount. And you can see that it had some trouble. It spent 4 hours here at 280. So it knows, price knows where there's a problem. And in this case, the resistance level is at 280, where all this trading happened before. So that's the key. Amazon, there's only one number to put in your mind: 35.54. 35.54. This this is the breakout of this massive range. Breakout, back test, undercut, recapture, 35.54. If Amazon is above 35.54, I feel okay. I feel good. You know, technical move accomplished, breakout, back test, go. We've got earnings next week. I'm not sure the day. Actually, I put it over here. 28th. Key off of yesterday's high. If it can break yesterday's high, you can get long and look for 36.40. There's not a lot of traffic in here above yesterday's high. So if things get going and we break above that level, there's not a lot of overhead resistance till you get up in here to 36.40. I like that trade. If things wobble, it's going to look like, you know, a downtrend and a Fibonacci rejection and then lower. But you gotta see that 35.54 hold in order to feel real good about Amazon. Netflix. This is kind of a moot point. There was, you know, earnings last night, so we took a dip down. You know, I think it was down like $40, so it was down here, you know, pretty low, and then they bought it back up. So watch today how it trades, and then, you know, we'll have a direction. And I often get this question, well, Chris, if price came all the way down here to 510, didn't we fill that gap? The answer is no. Gaps are only filled during regular trading hours. So if you know, price is up towards last night's close, and then this afternoon or today we go down like to 515, then this gap will be completely filled and we can take it off the board. But for Netflix, longer term, you just got to have 515 hold on the daily chart. Why? Because that was the breakout, 515. You drop below 515, you know, all bets are off. Google, support, top of the range. You want to see 25.35 taken out, and then you got a path to 25.60. So that would be my pivot for today, 25.35. Above, longs are okay. Below, the door is open for a little back test of 25.05 and possibly even all the way back to 24.80. Semiconductors is a more difficult trade. Why? Because we had a much bigger drop, and now we've had a 38% fib bounce. If this thing is in a downtrend, this 38, this 50, and this 618 retracements are where it would fail. We've got Texas Instruments tonight after the bell. That may have an effect. That's a big company. What I want to see here on the daily chart, you know, we're wrestling with the 50 here. We came down halfway into this range again. We got to get above 258. That would be a huge bullish accomplishment if we can do that. Still a lot of work to do here. And of all the main kind of risk on, risk off indicators, this is the one I'm most worried about. I want to see this risk on asset, you know, take the hit, recover 258 and go. If this thing languishes and God forbid lose 240, that's not going to be good for the Qs. That's not going to be good for the market. That's going to look like, everything's getting faded, and then you're coming down here to 223. So keep semiconductors on the board, even if just to watch for a risk on, risk off asset class, see how it's behaving. Joseph in the trading room pointed out this setup on Square. Had a big up day yesterday, up 5.5%. Set yourself an alarm at 250, right in there. You could kind of make the case that this has been a consolidation flag in this area. You get a break above 250, you could see a quick run up to 270, 275. And if things get, FOMO kicks in, you could see that move pretty fast. So I think that's worth an alarm at 250 on Square. And if you get that breakout, I would buy it, especially if you see positive price action in the Qs and the market in general. I like that trade. So a lot of new members. I'm glad you're here. If you're new to the channel, hit the subscribe button and the alarm bell. I'll do my best to keep you locked and loaded with actionable content. Jump over to the show notes. You can register for all my content with your email address. It takes 5 seconds, and then you'll get all my midday notes, market observations, etc. right in your email box. You won't have to be hunting on Twitter or other social media outlets. You'll get it right in your mailbox, and you'll also get an invite to our trading room. We've had a lot of new additions in the last couple of weeks, which is great. Glad to have you, and we'd love to have you be a part of that. Longtime listeners, thank you so much for promoting my channel and sending it out to your social media circles and trading friends, etc. Starting to gain a little bit of momentum, and I really appreciate your efforts in that regard. So let's see how today goes. Can we extend yesterday's gains? Do we consolidate for a day, or was it a one-day wonder where they crater it, we get a reflexive bounce, and then they crater it again? So just have your stops in place. I am long. I'm long the Qs. I'm long Apple. I'm long Facebook. I want to get long Microsoft. Just as a closing comment, we got big cap earnings next week. We got all the big boys. I think that will be a defining moment in the market. If they sell all those, we're going down, we're going lower. If they buy them, we're going higher. It's math, it's market cap weighted. The Qs and even SPY, those top 5 or 6 companies are 25% of the Qs, and we'll be going higher. I mean, if they pull the rug on that, we're going lower. Also, watch IWM. That thing can really move. If you bought the pivot yesterday, you were up $6 or $7 in a heartbeat. And if the rotation goes from, let's say, rates rise from here, you're going to see tech slow down or even backslide, and you're going to see cyclicals, IWM, banks, industrials, reopening trades, rip. So be ready on IWM. And it's also a point to make on a day like yesterday, and it doesn't happen every day, but you don't have to sift through 400 stocks to find stuff to trade. If you understand a handful of names, whether that handful is 8 or 15 or 20, know those stocks really well, know your pivots, and then trade around them. You don't need to, go to a scanner every single day and look for stuff to trade. Get to know some stocks really, really well, their tendencies, the drivers, the pivots, the resistance levels. And if you do that, you're going to make plenty of money if you're a good trader. And if you're not a good trader, finding new stocks to trade is not going to help. So anyways, hope you found the content useful. Hope you have a good day of trading. I'll keep you posted on market observations as I see them. This has been Chris Buss with Traders Profit Compass. Talk to you next time.